All right, so some of the most important chart patterns for my style of trading are reversals and continuations, right? Because we need to make sure that when price or stock is going down, we want to catch the moment it turns around and starts going up, because that's where a lot of the energy is. And then if something is continuing, we want to make sure we know when to actually get back in or continue adding to a trade that is working out. So for me, those chart patterns, I have some terminologies. One of them is called the elf shoe. Basically, it's a double bottom. I want to see price moving down and actually testing that low again, because if price doesn't go lower than the previous low, well, it doesn't want to go down any further, and that's when we actually catch it on the way up. And for me, for my chart patterns, everyone knows, for me with the Moxie Indicator, I call it the elf shoe, and it works out really, really well for me. And I think people can put a visual on it, which helps them identify it, because there's a little bit of a misnomer. When you talk about a double bottom, it doesn't exactly have to be a true double bottom. Sometimes they could be a shallow or a deep lower second low. And so having a visual about a concept that we're trying to do about retesting lows is important, so that traders can actually get the flexibility that they might need when applying these trade setups. The other one is for continuations. And this is where I love what I call the trampoline move. And so it ties with the Moxie Indicator, because the indicator is telling us that momentum is still positive. But when you see price dip below a moving average, instead of panicking out thinking, oh, why is price dipping below this moving average? It should be following it. You can actually have the confidence to know, oh, this is actually a viable dip, because the Moxie Indicator is still saying it should go up, because the energy and momentum is still up. And so this is the number one way that I get into a continuation trade, to make sure that price keeps going along these moving averages, and I can buy on good dips that give me a lot of energy coming out of them. And so another chart pattern that we talk about is the continuation trade. Once something is actually in a trend, you want to know either where to continue, or if it's going to run out, or just that this thing is going to continue to help appreciate and make money in your account. And one of the best ways for me to know that something is continuing is to make sure price continues to follow along an uptrending moving average. And my bread and butter, as far as the best moving average that I like, is the 50 SMA. I love it on all time frames that I trade, depending on whatever time frame you are taking the trade on. And as long as price is generally following that moving average in an upward bias, then the trade is generally pretty good. Now, the one thing I have added as I learned how to trade and as I built indicators is the Moxie Indicator. And the Moxie Indicator is what tells me internally when price is starting to run out of energy along this trend. Because a lot of times you can't tell what the strength of price is just because of where it is in relation to the moving average. The Moxie Indicator is what tells you underneath that you are running out of energy as this trend goes up, or if it's actually a really, really strong trend and has a lot of room to go. So if any of this sounds really interesting to you and you want to check out more, come on over, check us out at simplertrading.com. We have lots of education. We're in this every day, all day. And we like to make sure that you guys understand what you're doing and get educated about the stock market and these type of setups.